See, sometimes you might have to hire auditors, for example, or you might have to hire some external advisors, or in certain situations, you might have to hire internal employees whose duty will be to look after these representatives that they're not doing things which are rampant. So you might have to increase the salaries of these
What is the
people.
second one? I can
hire external advisors. So you might have to hire auditors, you might have to hire external advisors, you might have to hire internal employees, you might have to increase the salaries, and so on and so forth. So there are multiple things that you might be required to do, which are direct costs. Why do I call it direct? Because everywhere when you're hiring auditors, you pay them a fees. When you're hiring external advisor, you pay them fees. When you're hiring internal employees, you end up paying them salaries. And when you're incurring salaries, you of course have a greater salary cost. So the total costs basically go up on a net basis. So agency costs are these kind of costs which are incurred when you're trying to monitor the agents or trying to ensure that the agents don't do things that are rampant. These are direct costs. Simultaneously, there can be indirect cost. The indirect cost can be, for example, an opportunity lost. Opportunity cost of business that you lose. How? It can be something like, let's just say, again, going back to this example of insurance company and sales rep. The insurance company asks the sales rep to bring good business. The sales rep actually gets a decent business, which could have been, which could have gone through. But whoever is the employee supposed to oversee the sales rep, he figures out that, actually this is more risky, while it is not. And as a result of this underwriting, this business is not undertaken. So the insurance company loses this business and also incurs a direct cost of this employee. So it's like you have hired an employee in order to take care of the business. The employee is not efficient, or let's just say is too risk averse, as a result of which this business is lost. So there's like a direct cash cost being incurred because you're paying him salary. So there's a direct cost incurred here and there's an indirect cost incurred here. These are called agency costs. And these costs would not be incurred in an ideal world where the sales rep only does the right thing. But of course, it's never going to happen. The sales rep will not do the right thing because his commission of 10% is dependent upon sales. He is not supposed to look after bringing good clients. His only objective is to bring clients, to bring revenue so that he can earn his own commission. So that's like a major line of difference between the two, which becomes very important to understand, that there is a principal agent relationship and there's a principal agent conflict and agency cost that gets incorporated as a result of